Hello, Mr. Memani, and welcome to our show. We will discuss some of the macroeconomic issues and what the budget could deliver to address them. So, first of all, how do you see the impending recession in the developed world impacting the Indian economy, and what do you think we can expect from the budget this year?
I think the global economy, if I look at the projections of IMF, I think is likely to grow at 2.5% next year, which is probably one of the slowest in the last 20 years. And there is the impact of the interest rates as well. But I think there will be pockets of the global economy which will probably do better than what people projected to. I think especially the US. Because it's a fully employed economy still, and they have not felt the brunt of commodity prices because they're in some ways energy neutral. But nevertheless, I think we are seeing a slowdown in most parts of the world and also a recession. I think it impacts India in multiple ways. First is the the capital flows that will come into India. I think that may be a bit more choppier because when you have a high interest rate regime and a strong dollar, I think a lot of people, a lot of funds would find good returns in the US itself. A lot of this money flows from the US. So I would say the first impact will be the capital flows, whether it is private equity, venture capital, or in our capital markets, or companies looking at doing QIPs, IPOs. I think there will be impact of that. And also global strategics will look at capital allocation more carefully before they venture out into anything new. So I think that is the first impact. The second impact would be really you have India still has almost 21% odd of their GDP that comes from exports. And a lot of these exports are from developed markets. So to that extent, the impact of demand will be there, maybe lesser in IT services than what people anticipate, because I think companies will still be doing digital transformation and those kind of things. So I think that people anticipate that there will be a slowdown, but still there's no tangible evidence that things are slowing down but in other commodity exports, merchandise exports, garments, others, I think this will probably be felt more. And we are already seeing that. We're seeing early signs of that already in the last 6 months.
Now,
and that's also reflected in the current account deficit.
Yes.
The positive side, I'll just complete Ruchika. The positive side is obviously India is one of the brightest spots in the global economy today. So the momentum is there. And when you have a slowing global economy, you do have commodity prices which slow down. So oil prices have come down, likely to come down from their peak. Fertilizer prices, same thing on that. So the government will have more money in their hands. And if the government can spend that money that they save because of lower global commodity prices, and if they can utilize that money rather than exporting that money out, but they utilize that money in the domestic economy, then there is greater value addition that happens in India. And especially if they can do more rapid implementation of projects and on the capital expenditure side, I think that will have. So it's a mixed bag. I think I still feel the Indian economy should grow more than 6%. If you would have a buoyant global economy, you would have had India growing at more than 7%. It would have been probably between 7 to 8%. Right now, probably it should land somewhere between 6 to 7%.
Now, interest rates are rising. And do you see that impacting the domestic consumption, slowing down further? And do you think that will be something that will be playing on FM's mind when she's making announcements for the budget this year?
Yeah, if the private final consumption expenditure, PFSE, which we call, I think that's an important denominator for India. I mean, in the sense that almost 60% of the GDP comes through consumption. So it does have an impact. Interest rates moving up. But I think with the moderation in commodity prices, looks like that we are not out of the woods from an inflation standpoint, but definitely It's not out of control. So if you have a slowing global economy, I would be probably slightly less worried on interest rates moving up significantly. Also, we have good tax collections, very strong tax collections. And if they continue, then the fiscal deficit stays under control, government borrowings stay under control, and therefore the impact of interest rates will be less. What has happened in the last 6 to 12 months, what we've seen, that the at the higher income levels, consumption has not got impacted as much till now. So if you look at sales of consumer durables, passenger car vehicles, I think they're more slowed because of the supply side constraints relating to semiconductor. But otherwise, there's been great buoyancy in demand. Even if you look at the absolute premium segment, except maybe for the last 3 4 weeks, the sales have been the highest for all global brands who are operating in India, and they want to do more and more. The real challenge has been much more on the rural side of the economy, in more lower income uh, areas. There, I think definitely there is demand stress that has happened. I do hope that if the economy stays buoyant and if employment opportunities do get created, then I think India is used to this kind of interest rate. So a 0.5% movement here or there will not have a big impact as long as people feel optimistic. There are jobs that are going, economy is growing, and everything else. So I would be less worried on that count as long as the fiscal deficit stays in control.
Private investments are yet to pick up. What more measures and reforms that the government you would like the government to take to encourage the private sector investments? I mean, beyond
Yeah.
FDI, etc. What is it that we can do?
So I think private expenditure, there are two, three things. One is to make private consumption or private expenditure, capital expenditure. If you were to look at logically, I think people would look at two things. One is where is your capacity utilization? Where is the potential demand? And thirdly, do you have the balance sheet to do that? I mean, I think eventually those three things will drive. And fourth, obviously, is what are the enabling conditions around policy, fiscal incentives, tax rates, and everything else. So if you take that one by one, I think capacity utilization in India now, whether it's 75%, 72%, is inching up. I think when you start hitting those levels, people need to plan capex. So I think from a capacity utilization standpoint, things are well. On the demand side, except for those people who are in exports in a significant way, I think domestic demand seems to be picking up. And the other thing that's creating that demand is also the larger Indian groups are now investing significantly. A lot of those investments are in the areas of new energy, infrastructure, and everything. But you see massive announcements from Reliance, from Adani's, from the Birla Group, from Jindal's, from some of the larger industrial houses, and that those things have a trickle down effect. So I think the demand side, to me, also seems to be under control. And the third is really balance sheet. You have the balance sheet strength. I think both the balance sheet of all three balance sheets, I think government balance sheet, at least the central government balance sheet, is in a reasonable shape. I won't say it's prim and proper. We still have over 6% fiscal deficit, but gradually it's trending down. If I look at the balance sheet of banks and financial institutions, I think they're very strong. India went through this curveball in 2016-17, when banks really went through a lot of pain. But I think now they're in great shape. And so are the balance sheets of private sector. And I think they probably leverage levels are one of the lowest. Balance sheets are reasonably strong. So that's the third sort of enabler. And the fourth is really around fiscal incentives, policy measures. And I would say their tax rates in India, probably corporate tax rates have been the lowest ever. They've been stable for some time. There's not been any tinkering. And PLI scheme seems to be working well. I think we're seeing more impetus on manufacturing and others. So the enabling environment around capital, private capital investment coming in is very strong. Data still does not support it, but I think in the next 6 to 12 months, the data will also hopefully start showing a pickup on the private capital investment side. The issues around enforcement of contracts, issues around ease of doing business, I think those are the bigger challenges that we have, the softer issues. And if you honestly ask me from a budget standpoint, if the finance minister has to focus on one thing, a lot of it has to be on the softer side.
What is a good budget for you?
As long as the budget indicates trending towards lower fiscal deficit, uh, some more action on the non-tax revenues. I mean, tax revenues are doing well, but some greater impetus on the non-tax revenue side. The quality of capital expenditures of the government expenditure changing more both on the social side, which is on health and education, as well as on capital expenditure side. Uh, the stability in tax laws, dealing with issues that relate to ease of doing business, especially around, as I said, dispute resolution and everything else. It's really a big issue. And stability of tax policy. I would say those, I've already talked about national infrastructure pipeline, others. As long as we can see more activity on that, I would say that would be a good budget. If they can find ways that personal tax rates, especially in the lower income slabs, if they can be reduced, then I would say that will also the impact of inflation, the impact of higher interest rates, to some extent will get absorbed at lower income levels.
There's a lot of talk around China plus one. Multinationals are talking about the China plus one strategy.
Yeah.
What do you think? How is India placed in that strategy, and can the budget do something to tip the scale?
I think as I said, India is very well placed right now. And there are some global mega trends that we are seeing. And you talked about China plus one, the geopolitical issues that are there. And there are not too many places in the world which are bright spots today who are looking at that kind of growth. So India would be, if not the fastest growing large economy, probably one of the fastest growing larger economies. The other trend is that people do want to de-risk supply chains. And I think in that context, the global dependence on China is very high, especially from a manufacturing standpoint. So definitely there'll be a shift out of China. Whether that shift, what percentage of that share India can take really depends on India. I think India has, some key ingredients for that. We have a large domestic market, which makes, for people who are manufacturing, it's good for them if they're manufacturing in India because, some part of it can be consumed in India. The iPhone 14 is a great example of that. Second is people are talking more and more of friendshoring. And, if whenever people come back from the US, some of the US leaders, municipal politicians have come and they've talked about this friendshoring thing. And India is seen as a very trusted, reliable partner. And also being one of the largest democracies in the world. And what happened during COVID, when India went through a crisis, how the government dealt with, how the world came around to support India. I think that has given a lot of confidence to people. And the PLI schemes, the tax schemes, stability in tax regime, I think political stability, that's also helping. So the de-risking of supply chain, China plus one is a reality. There will be shifting of activity from China. I think if India can address, be more aggressive, scale up the investments faster, look at implementation of plans like Gati Shakti, build up the infrastructure on ports, railways and others, cut down logistics costs is one of our biggest inefficiencies. If we can create a more positive environment for people to invest, as I said, more around the softer issues, then I think this could be really a golden moment for India in terms of manufacturing.
Great. Thank you so much, Mr. Memani, for sharing your thoughts on the upcoming budget. Look forward to speaking to you soon. And thanks again for your time.
Thank you very much, Ruchika. Thanks so much. Thanks.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.